Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. Today is June 17th, 2018, and this is my weekly trade review, where I review a NASDAQ trade, a NASDAQ 930 opening trade, where if I see a 5-minute candle green, I would like to trade up. If I see a 5-minute candle red, I would like to trade down. This is all for educational purposes only. Trading is risky. You can and you will lose money at trading. So please seek out your financial advisor. Please seek out your significant other. See if trading is something that's actually suitable for you. Check out our new look, Right Side Trading. We're actually doing things a little bit different. I actually have started doing things a little bit different myself. You know, in the last couple of weeks, last 3 weeks, I've only done one trade a week, and it hasn't been a NASDAQ trade. I've been trading stock, and it's a different strategy that I've done all along too. I do it along with my day trading. It's just that I haven't been able to day trade here lately because I have started some other new stuff also outside of trading. So just got that, like my friend told me, still just making money. That's all it's all about for me. All right, I'll be posting this video out here on the YouTube page. Check out my YouTube page, subscribe. But let's get in here and let me see if I can show you some things on the chart and show you what I'm looking at with these day trades and stuff and all. All right, let me start up the presentation. Again, like I said, today is June 17th. Happy Father's Day 2018. This is going to be for the week of June 11th through June 15th. You know, check out our new website, rightsidetrading.com. If you have any questions or have any comments, comment on the website. Tell me what you think about the new website. You can email me at solomon@rightsidetrading.com, or you can email info@rightsidetrading.com. Okay. June 11th and 12th, it was no trade. The next best play was to the upside. It was one of those greater than 10s. I do have a couple rules out there. If that first candle is greater than 10 points on the NASDAQ, I look to pass and look for the next best play, you know, my next best entry. And if it's a doji, $1 less between open and close, that's also a no trade. Then on June 13th, it was up for 10, and it was a good play to the upside. On June 14th, it was 14th and 15th, again, greater than 10, no trades. And people will always ask me, what do you do, you know, when you get these no trades? The thing is, that's a no trade for that first plan off that first 5-minute candle. You have to use your other indicators that you have, whatever you like. You know, me, I actually almost go to a whole different trading style where I'm not buying. A lot of times I'm selling options, you know, and that's what I've been doing a lot lately. I've been collecting that credit on these high ball days and stuff, and keeping that money. That's what it's all about. That seems like I'm a whole lot more comfortable with that, and it worked well. I'm not a whole lot more comfortable with that, but I'm very comfortable with doing that and all. And you can get some pretty good premiums when the volatility is up. But let's go ahead and take a quick look at the charts and see what we see on the charts for these trades that we had this week. No, first of all, as I always do, let's take a look at the big picture. The big picture's been doing exactly what I expected it to do. And I was expecting to come up here and break here. We were going to break this area. We did break this area, break these highs. And then once we broke this high, I want to see, would we retest this area? Would we close above this area? And that next day after that, we closed right at that level. And then the day after that, we kind of shot back up. And then here on Thursday, we came back down almost and test that area again and push back up. So again, I think this market is ready to go higher. We're going to start seeing volatility drop in the market. Also, even though volatility is dropping in the market, there's other items out there that I like. I like trading around earnings, so just let you know. And I like selling stuff around earnings because those things are usually pumped up pretty good. And I sell on things that I don't mind owning, to let you know the style that I actually go about selling. So but now let's go to the daily trades. On Monday, as I had said before, it was greater than 10. And what I do, I look from wick to wick. For you newbies, is there anybody new out here looking at what I do? I look at from this wick, that's this wick here, to this wick, and if that's more than 10 points, it's a no trade for me. I end up passing, and then I have to use my indicators and decide, okay, what am I going to use, how am I going to go ahead and get in that trade. As you can see here, I have some moving averages on here, and a lot of times people use moving averages when one crosses over the other. They say it's getting ready to go into an uptrend, and it's okay for them to go long at that time. If it's going in the other direction where it crosses below, it's okay to go short. Just like over here, it never did cross below each other to give you a nice short play, but over here it did cross to give you a nice long play. And let's kind of just take a quick look and just see how that played out. That's why I do that a couple of times here. Seeing that did play out the way I look at it, 81 to 91. A lot of times all I'm looking to get is 10 points on these trades. And that was good for that 10 points. You know, that's all I'm looking for next on that particular trade. Then the next day, this was the day, based on what was going on in the market, where I actually sold my put spread on the item that I actually was trading, because I saw the market was going down here and it looked like it was getting ready to go higher and all. And this right here was another greater than 10. If you look at 205, 215, that's greater than 10 points. So again, that was a no trade based on that first 5-minute candle. And so that usually helps keep you out of this type of stuff, trying to get in this trade and go long and see how it went against you. And that's why you got to use your next best play. And plus, I was at a line here that was a resistance line for me, or a supply line. So that's another reason for me, you know, based on the way I set up my charts and the way I look at the charts, that this would have been a pass. Definitely would have been a pass. Let's go to the next day. Next day, this was the day that it was up for 10, and this one wasn't greater than, it was just barely, you know, not great. It was at 72.41 and 72.50. It was only 9 points, and to the upside, you know. And also my other, you know, kind of like enhancement, you know, to my trade. You know, I'm seeing the market is up here above one of my pivots that I use on my charts, and this blue line is also a previous day high line. It should be a previous day high line if all the colors came out correctly. And I look for the market to usually stay above those areas and go higher. And when I see that, and that's what it did that day. And again, it went from pivot to pivot. That's one of the things I also look for. And my pivots are, as you can see, they're a little bit different than other people's pivots. They are custom pivots. They are pivots that I've calculated based on, again, everything is based on open, close, high, and low. So it's based off of that. And but we do it a little bit different the way we do it. So let's go on to the next day. This was another greater than 10 day. Next best play to the upside. But as you can see 65.75. That's a greater than 10 candle. And although we're above pivot, you look for it to stay above pivot. And we had another pivot, you know, but this is always kind of scary here. But here's my supply line. The supply line is way down here. So again, me, based on the way I have things set up, I look for that market to keep going towards the upside. And it did come back down here and test this area. You know, so that's why, again, it's best not to enter that. Wait for that next best trade to get into that thing to the long side. And when you start seeing patterns and seeing things like this lets you know that that entry is good. Crossing back above this pivot line and putting your stop just below this area right here. You know, that's what you look for. Now let's go to Friday. Friday again was another greater than 10 day. Again, 65 to 75. You can see it as a big candle, and we're below pivot. That's the central pivot. This is the other pivot. So now we're below pivot, stay below pivot. This market has been going down. So again, to the downside is the way you would want to trade that. And again, where do you enter this trade? Do you enter this trade right away? If you enter this trade even right away, you could have got 10 points, you know, based on how this thing went. But if you'd have waited, you know, and played off I think we had a name for this candle pattern right here. We used to see this a lot, and playing it back to the upside there. You know, it's all, again, you got to use your indicators. Or you could have waited until it came back to the moving averages and kissed off the moving averages and continued back to the downside and played this thing. There's a lot of different ways of playing this thing. This, like I say, this is all about showing you what I see on the charts, and one of the ways I look at trading these things in the market. You know, but that's pretty much it. That's pretty much it. Like I say, it was a couple no trades with up plays, an up play that actually played out real good. Then it was a couple no trades, you know, with an up trade that played out and a down trade that played out, all based on how you want to look at the market. You know, again, if you're interested in learning and taking a closer look at this with me and getting some coaching, you know, I help you get your platform set up, help you set up some entries and how I look at entries and exits, and helping you set up, for trading the ES, the NASDAQ, the Dow, the Russell. And we can also look at how you can just look at any stock out there in the market and learn the day trading and how to find those trades that are happening out there every day. Also how I use support and resistance, how I look at candlestick patterns, also how I go about selecting options for day trading if you want to continue day trading. Like I said, I haven't been day trading that much. I've been doing some different things here lately. And then also we can do some live practicing. Put on some trades in that practice account. That's the thing. You got to learn to practice. Good practice until you get good at practice before you actually throw some live money out there. If you like any more information about any of this, just contact me, Solomon at rightsidetrading.com, and I'll be glad to help you. As I was saying, this is my weekly trade review, June 17th, for the week of June 11th through June 15th. Again, thanks for viewing. Like, subscribe. Have a great week and have a happy Father's Day, you fathers out there. Talk to you later. Bye.